The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 27. You get the Nasdaq up 26. S&P's up 7.5. Gold contract flat at $12.90. Silver is flat, $16.19. Light sweet crude down 40 cents, $70.91. We're going to get those numbers in the oil market this morning.
That's right.
That oil, man. You
want some volatility, man.
Yeah, you better dig in your pocket, folks, because it's going to be costing us more money this summer driving around. Notes and bonds. You get the 10-year note up 1 tick, 118.20. 30-year bond up 5 ticks, 141.07. They both got smoked yesterday with volume, broke a lower swing points. King dollar's up 87 ticks, trading at 93.180. King dollar just came into its December 2017 high and didn't handle it. So it's going to be interesting to see what we're going to have with the good old King dollar. Euro's at 118 and 14 to 1 US dollar. The yen is out here at 110 and a quarter to 1 US dollar. Option expiration, monthly option expiration. Got to go over to our man, Mr. Kevin Hinks, TD Ameritrade, Thinkorswim. Don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, you want to understand strategies, you want to understand the future market. They got a great program. Just go to TFNN, hit TFNN.com, hit the Tiger TV, or go to YouTube and just put TFNN in the search bar on your phone. Hit subscribe. It's free. Bottom line, all the programs are right there. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Sorry I missed you guys yesterday. I was on a plane coming from New York trying to get ahead of that weather that was going out east. How you guys doing?
We're doing great, man.
There's a lot of crazy weather going on. Whether it's northeast, we've had some, we're coming into our intense rains, but even more so than usual. We're getting rain today, Sunday, every day. Yeah, so there's a lot going on. Yeah.
Yeah, the whole East Coast looks like it's sitting under a cloud right now.
A lot of moisture.
A lot of moisture. How about the market? You know, how about the bonds?
Pretty amazing day yesterday in the bonds, Tom, in terms of yields.
Yeah.
Because I don't think this market really liked how fast they went up.
No, listen. There's no doubt. You know, it's quick. I mean, it's basically it's kind of, you know, depending on looking at this thing. I'm saying, okay, are you really going to run, you know, up like another 0.5 percentage point, which, you know, when I was talking with Andy Heck, who was on yesterday, he says, well, you know, we're still in low rates. I said, yeah, we might be in real low rates, but guess what? Even you and I used to higher rates, but that's a long time ago, man. Do you know what I mean? That's not in where we are right now. This, you know...
Don't date yourself. That's not very recently.
Yeah, no, that's what I mean.
Ago,
that,
exactly.
You know, you know, when people say, hey, we're still low, it's all relative, man. There's a lot of debt out there that, you know, couldn't handle, basically, a couple percentage points higher.
Oh,
you know?
Right. You know, you're talking about a U.S. dollar that was higher yesterday. You had a Home Depot miss on earnings yesterday. You had the rates going up yesterday. All these things added to what I thought was just a pretty normally soft day. What I'm really kind of surprised is that's a one day. I mean, are you telling me we're going right back up after one day yet? Yesterday, that's pretty impressive for this market. Because remember, it's had a 7 or 8 day run when we were up every day.
No,
so I really thought it'd be more than one day, frankly.
No, I agree. Even yesterday afternoon, you know, at about 2 o'clock, I says, man, you know, this is pretty impressive because the market was settling down and they couldn't get it any lower. It was like...
I had to chuckle that the VIX was right back in at 13 handle this morning off the opening bell. Yeah.
Right.
Yeah, remember something, Tommy. People are looking at, and we talked about that on the Future Show this morning, people are looking at the calendar, where we are on the calendar, and they look at a 14 or a 15 VIX, and they're like, boy, we're high for where we are on the calendar. Now you've got to mesh the two together, the overall trading environment with where we are. Remember, we're a couple weeks away from Memorial Day here, and then it's summer trading. And make no mistake, a 14, 15 VIX might be a little high unless we get some type of event or a risk event.
Yeah. Now, I remember, it's pretty wild, how long you've been doing the show, with us. Because I remember last year when you were explaining on swim lessons the aspect of summer trading, and that's what you're saying, really, the VIX comes lower, right? Because, because it's not going to be
less on the market, less volume going on.
Right.
Overall, more muted moves when data comes out. You're just not getting the high volume. Let's face it, Tom, it's summer. There's just less eyes on the overall market.
Right.
It's vacation season, so all in all, markets grind to a little bit lower levels.
I was going to say, somebody's got to go be hanging out in the Hamptons, hanging out in Cape Cod, right?
Yeah,
I mean, seriously, to a certain degree, right?
It's pretty cool, actually, when you think about the aspect of how it kind of, how the world revolves, and the market itself does revolve like that. That's the bottom line. What's going to be interesting here is that the aspect of this currency move, man, it seems like these currencies have moved really quick, and I'm not... it seems like we're almost going to be in a currency interest rate environment right now. And until that gets straightened out, the market itself is trying to figure out, like, okay, what am I going to do here?
Definitely.
Right, and safe to say, Tom, and you know this, I think this dollar has gone a little further on the upside than a lot of people thought. And that's what futures will do. Futures will go where they can hurt the most people.
Yeah.
And if there's people leaning short dollar, we've talked about it on the show for quite a while, how there were a lot of people pretty bullish on the U.S., pretty bearish, on the U.S. dollar. So I think this move has gone, in terms of duration, it's gone longer than people thought, and it's gone a little further in price than people thought.
Yeah. Hey, how about Macy's, right?
Yeah.
Macy's, basically, they looks like they will get it together.
Almost 7% today right now, I think.
When you look at retail earnings, and we're going to get a lot of them in the next few days, we got Nordstrom coming out, Walmart after the bell today. We're going to trade Walmart on today's swim lessons. But Macy's, when you see these retailers, Tom, it's all about same-store sales.
Yeah.
And they were looking for up 0.7 same-store sales, and they came in up 3.9.
Yeah, big numbers.
Huge beat. That means bodies in the store. And that leads to all good things.
It's impressive, man, and I'm psyched for Macy's because I love that store,
right.
And I think they can breathe now, and they'll probably still keep bringing their store the footprint down because they should
fine-tuning kind of their
exactly
top-notch stores, whatever.
And Macy's are one of them stores. They're constantly now streamlining, and it looks like it's starting to show up in the numbers here. And what word am I looking for? Where there's a lot
distribution,
of
right?
Multi-dimensional, maybe.
Yeah. Where there's a lot, inside a Macy's store, there's a lot of little stores. There's Polo, there's all the different names, right? So that's kind of, it gives you a little different feel than some of these other stores that are like single names.
I'm a Macy's fan. I have a Macy's card, and I do, and I don't keep any money on it, but you get some discounts occasionally. And I'm familiar, Kevin. You go to the Polo section, right? You go to the Perriellas section as a guy, and then they have the suit section. They have,
and they have those big sales. When those big sales come in, it's a good number, man.
I also though feel like everything is always a sale with your Macy's card. Just so that's kind of so I don't like to get too trapped into anyway. It is, right? Everything's on sale, totally.
Everything's on sale except the market. Right here, folks, 45 minutes from now. Kevin, we look forward to the show, man. Have a great one. Have a safe one.
Thanks for having me on, guys.
Thanks, Kevin.
Stay right there, folks. Tommy and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials right now up 12. You get the Nasdaq up 27. S&Ps are up 6.5. Let's go see what we have going with the highest volume stocks out here. Not that there's going to be a huge market out here today, but Macy's is right at the top, up $1.70. Micron Tech, we'll see what's going on there. That's up $1.70 also. We have NVIDIA up $1.90. Now, NVIDIA got smoked yesterday.
How about Caesars? I got a little interest just with the sports gambling, right? We really hadn't talked about yet the whole with online sports books. So Caesars, I wonder what's going on with them. Let's see, Caesars Entertainment. I'm just clicking on the news headline. Okay, that's just a conference, but I'm sure that's on the heels. I mean, you had news this morning that Churchill Downs had teamed up with the Golden Nugget in Atlantic City so that they can start doing business in New Jersey ASAP. I mean, they're talking about in a week or two. By the time the
March Madness happening, right?
No, we're in May.
Oh, that's right. Oh my God.
But you do have the NBA Finals happening.
Okay. Yeah, right.
That they could have sports betting by the time, because New Jersey's been gearing up for this. They passed it. They're the ones that brought the suit to the Supreme Court.
Right.
So they literally just have to flip the switch, in essence, as in they have it in line. So can you pull up CHDN? Because this is going to be Churchill Downs. F8, right? See how they're doing today.
Look at that.
Yeah, so quite a run off of the moment that it got legalized.
You got an ABC up. Wow.
Okay.
That's a nice chart, man.
So interesting as to all they play out and how that works. I saw one study saying something like 36 states could legalize it in the next 5 years.
Okay.
So it's something where states, it basically, the Supreme Court decision just kind of pushed it back to a states' rights issue, so it's not like it becomes, quote-unquote, legal in all different states, but it just becomes an option where states have the ability to legalize it. And pretty much the consensus is many states will as a result of, you know, revenue, tax revenue, and the fact that it's coming down the line anyway. So why would you not, right?
Yeah, so they take in right now, this year they're looking at just under $1 billion. Next year they're looking at 1.1. But I bet that number's going to go up.
I was just going to say, I would imagine that the Supreme Court decision is not quite factored into that yet.
Right, because they're saying already that they have simulcast wagering operations, of course, Kentucky, they're in Kentucky, but Indiana and Florida. Florida's a big number,
I was just going to say, they're going to add New Jersey on that.
Yep.
And they just did this morning with, you know, the teaming up with the Golden Nugget and AC.
233, it's a big one. It's $50 A to B.
It's pretty remarkable to see how this is going to shift so many things in terms of the value of sports franchises automatically because there's more interest. Maybe the value of ESPN, right? I was thinking yesterday, I was pulling up new scores on my phone. So you had the Lightning game last night. They won. Just
right. Oh, so, it was a great game.
Yeah, so they're down 2-1 down there in the series. You had the Celtics game versus the Cavs. They won, so they're up 2-0 versus the Cavs.
I have to watch those because the Cavs says LeBron, right? Okay.
Yeah. So the Celtics have been playing great. But I started to think about, so you pull up the score on the ESPN app, right?
Right.
There's going to be little buttons that's like, bet on this game, right next to ESPN now. You know, right next to the score, right next to anything. So I imagine that ESPN has to love that, right?
Yeah.
If there's more attention to sports, and you're in the sports business,
it's big.
Is ESPN going to become a big gambling company? They really could.
And I mean, that's definitely more advertising.
Yeah,
huge.
So it's going to be interesting.
Wednesday, oil.
Wednesday, oil. So it's 10:22 right now. We get those EIA numbers every Wednesday at 10:30 a.m. Eastern Time. Pulling up the oil contract. We're looking at the June contract, currently trading $70.71. Okay. So I jumped in to begin with, and let's take a look at maybe setting up a volatility trade like we do. Excuse me, like we like to do. So we'll look at both sides of the market. Here's a bullish spread. I started with the 11 a.m., so these expire at 11 a.m.
Yeah.
We get the news at 10:30, so this will give us pretty much the shortest time frame possible with the news in play. And so all of these contracts are going to line up with 71 being your pivot point, where you can have maybe a bullish spread on one side, a bearish spread on the other, and you're looking for volatility. Now, you can always take one side of that trade if you just want to have a market bias. But what's going to happen here is that if you're taking both sides of these trades, you're going to have a little bit of a bearish bias in that you have intrinsic value on this bearish spread to the tune of almost 26 cents, right?
Yeah.
So here would be our bullish spread. That's going to be out of the money. It's going to be all premium. That's going to be the cheap leg. Here's going to be your expensive leg. And that's because you're paying 27 cents automatically in intrinsic value, and then you're adding on about 9 cents in premium. So this becomes a little bit expensive if you're just looking for pure volatility.
Yes.
Because you have to pay for that intrinsic value.
We're at $47, right? Yeah, 47 cents, $47. Okay.
Yeah. Now, if you had a little bearish bias, that might be a nice trade because, you know, to break even, you only need to trade $46, 46 pennies below 71.
Right.
And you're already 28 pennies below it. And if, you know, you have some type of explosion to the upside, you still have exposure. But this takes upon like a little bit of a different angle than we normally like to look at, where if it's just trading at $71, you're just able to trade straight premium on each side.
Yes.
So that was our 11 a.m.s. Let's jump to the 12 o'clocks.
Okay.
So these go from 10 till 12.
Yeah.
We're going to be dealing with identical prices.
Same number, which is pretty cool.
Yeah. So on the positive side, instead of $10, it's going to be 13. And then on the negative side, instead of about 36, it's going to be about 39. So we're looking at about $52 for the noon trade.
Yep.
And again, same exact prices, same exact $1.50 spreads in either direction.
Hour for $5.
Just an extra hour.
Right.
And then to stretch things out a little bit further, if we jump to 71 to 74 for the 230s, now these are $3 spreads instead of $1.50. But realistically, a lot of the premium being added is for that extra 2.5 hours trading from until 2:30. So your bullish spread becomes $17, and your bearish spread becomes $46. So you're looking at about $63 for your for your 230 trade, with $3 of potential. And just to reiterate too, and you jump down to this is what's always interesting. You jump down to the dailies where the $5 spreads are.
Okay.
And this is where. If you were going to make these 230 spreads instead of taking the daily ones that start at 8 a.m.
Right.
You'd probably be better off trading the ones that are the $5 because look at the market. They're identical.
Yeah.
Okay? So you know, you're not paying anything more, and if you get a break in one side, you have $5 instead of $3, so a cent. So again, you know, lining this up, there's your bullish spread, 71 to 76. There's your bearish spread, 71 to 66, and we're talking about basically identical prices, paying about $63, $62, same deal for your
because it just moved a little.
Yeah.
That's pretty cool.
Yeah.
I mean, when you think about it, and that's important to understand, folks, when you're doing any of these. Okay.
Yeah.
If you're going to pay the same amount and you have a larger spread, well, take it.
Yeah. Exactly. Basically, the market is assigning no extra premium.
Right.
For $5 of ability versus $3 of ability, and the reason why, the fundamental basis, just to understand, you say, well, why are they doing that, you know? Why can you get $5 of potential movement without paying any extra premium? And it's like, well, because realistically, there's very little, almost zero chance that oil moves more than $3 prior to 2:30. But the reason why I say is almost very little, right? I mean, it's not 0% chance. So if they're charging you $0 extra dollars, and there's greater than a 0% chance that you might be able to profit off of that, why would you not take it, right?
Totally.
So we'll see what happens. We got 3 minutes till those numbers come out. Oil trading $70.77.
Stay right there, folks. Tommy and I are going to be coming right back. We have the Dow right now up 29, NASDAQ up 28, S&P's up 8. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So crude inventories fell 1.4 million barrels.
Yeah, and to clue in the expectation, Bloomberg users were expecting a rise of 1.1. So a bit of a miss. We'll pull up and jump back to the Nadex platform. And on that news, you have oil
Look at that pop.
fading higher. Quite a pop, man. We were down there at $70 and call it 75 cents, maybe really 70, and we got about a 45 cent pop to the upside. Now, this is where it's important to note, and that's why we stressed it, where it wasn't quite an even volatility trade today, right? If you were going to take this trade, you were looking for potentially the easiest way to become profitable was to move downward, right? Because all of the spreads we were dealing with started at $71. If you were taking both legs of that, you needed... it was easier to break even to the downside because, you know, whether it was 40, call it, let's say 50 cents of movement you needed on any of the contracts, at least you were talking about 50 cents away from 71.
Right.
So right now, any of those trades, if you were taking both legs, your max loss would have been at $71. And so you can see how you get a decent move. You get 40 to 50 cents movement initially, and really you're getting in the wrong direction, though. Right. That's where it becomes difficult. Now, you know, the other side of that, though, is that you could have just taken, let's say you thought oil was going to pop. Let's say you thought there was going to be a miss. The bullish spreads, because they were out of the money, you have broken even, which is interesting. So if you had just purchased the bullish spread, those were hovering around 71.10.
They were cheap money.
71.10. So that's where you can see, okay, you know, maybe if you're just taking the bullish side, you could have gotten a pop, and already you're at break even, let alone you're only putting up $10, 10 cents above 71. And so, you know, if you start getting some serious moves, that's where you're making 2 times, 3 times, 4 times on your money. So a little bit of a miss. Maybe higher oil prices could be in store. We'll see. But as we know, the first move is not always the move that carries out. And we'll see if that goes back. Let's just jump back. I'm interested to see. There's the breakdown. So the median estimate was even bigger than the Bloomberg estimate in terms of a decline of about 2 million barrels they were looking. Now, that's interesting because that's talking about a decline versus Bloomberg users were looking for a rise. So maybe the miss wasn't as big as they thought in terms of, but interesting how maybe that was an update where you get the median estimate, that's the analyst's estimate versus just a Bloomberg user survey. PAD 3 crude down about 1.5 million. Gasoline, pretty big miss as well, declining 3.8 million barrels. Estimate was only about 1.4. Distillates, barely off versus the decline, looking for about almost 2 million barrels. Yeah, so they talk about demand, always interesting. Fuel demand falling 1.1% in the past 4 weeks. Ethanol stockpiles falling, ethanol output rising. And to jump back one more time, so look at that. Yeah, crude exports rising to quite a graph in terms of our exports rising, surpassing 2.5 million barrels a day for the first time since the ban was lifted last week. Cheap Texas crude is definitely helping. Cheap Texas crude.
Yeah, compared to Brent. Because someone had called yesterday and said Brent was almost trading. Oh, no, I was talking to Andy. He said Brent was almost at $80.
Interesting.
And so that's in Europe.
That's
folks.
amazing.
Yeah, it really
quite
is.
a number, $80, yeah. So right at $71, that would have been a max loss situation if you were buying that volatility, but we're getting some volatility right now, so we'll check back into the hour, see where we are.
Let's go over, and you know, as you're on the Nadex platform also, folks, don't forget, you know, if you haven't test drove it yet, real easy to do, just come to our website, hit the button to bring it up. You can, basically, they'll put $25,000 of paper money into your account. Bitcoin.
Yeah, we have some volatility in Bitcoin, for sure.
Yeah, so we're down 313. But this week we've traded from 88.83 to I guess 8,100.
Yeah, we're approaching 8,000 last night. And just to jump back over and see where those spreads line up. So we'll jump down. You got the cryptocurrency spreads, Bitcoin. Now they opened this week from 47 to 12.7, with just like you said, about 8,700 being the opening middle mark of the spread. And yeah, we've had some volatility for sure. And
look at that.
What's really interesting, that's what I was going to say, is that the volatility tends to be coming in all one quick move. Right? I mean, you know, just going back to,
look at that.
That's going back even a couple weeks. But, you know, this is Tuesday, the 15th. You can see that they're all, and these are 5-minute bars that we're looking at here. Yeah. So it's pretty amazing that all the moves proceed to happen in about 5 minutes. And then you get a calm, and they're probably even quicker than 5 minutes. But just you can see, you know, that bar, 200 point to the downside, right? And then, boom, you get, Tuesday night. 150 points. Tuesday night again, about 10 o'clock last night, about 100, 200 point moves. And then again this morning, same deal. 6 in the morning, spike up. 9 in the morning, spike down. They're all just
Let's see how many
spikes.
contracts we've done so far. So it's the CBOE and the CME. Oh, that's
nothing.
No, that's
what's
shot.
going on in the CBO?
I know. So, and the CBOE this morning, folks, only 462 contracts. That's 462 coins. CME done 3,100, which would be 15,000 approximately.
I mean, I feel like I want to ask: is the CBO even open? That's
really unusual.
Shockingly,
I know.
That's where you want to have like your red flag. Factor, as in something else seems like it's happening on the CBO. That number is drastically below where we normally see it, especially when you look at the CBO. Okay, so CME.
Right.
Trading 15,000 contracts.
Right.
And the CBO trading 400.
Yeah. It's pretty wild, isn't it? Yeah.
Everybody abandoned the CBO?
I guess so.
Seriously,
Man.
At least in Bitcoin world they
Today did, no doubt.
Yeah.
So let's go over to so all the 13F filings come out also, folks. And if we take a look at the GLD, Street Tax Trust, just to see where everyone's hanging out here. So the ones you want to look at, well, there's a lot of them. This is pretty cool, actually. So the 13F filing, what happens is that they come out 45 days after the end of the quarter. And what it tells you is that where the big players were at the end of the quarter. I mean, they could have changed that position since March 31st.
Yes.
But it gives you kind of an indication, okay, of people coming in or out. So Morgan Stanley, this is really interesting. They doubled their position up. Now
how does that work? Because that's not actually a 13F here. It says
okay.
So just to,
I'm not sure.
Yeah.
Let's see. Okay, hold on. Okay, so let's
ultimate parent aggregate. If you scroll over,
I got to find out what that is then. Okay. Yeah, I don't know. I'll find that out today.
Yeah, maybe that. Yeah.
Yeah.
Because maybe that could be just different, like an ETF type filing versus an actual ownership position filing.
Right.
But you can see the number of 13Fs as you go down the line for sure.
Yeah. So
go ahead.
No, go ahead.
I was going to jump to the negatives and just curiosity-wise. Yeah. So same thing. BlackRock, maybe that's a different.
That's interesting too, because BlackRock is iShares, but that's a 13F filing.
So a 13G says it's a.
Oh, that's 13G. Okay.
Yeah, it's year end with the SEC when a person or company acquires more than 5% of stock.
Okay.
And then to get down to a 13F, you have Orbis World dumping about 1.1 million shares.
They dumped them all. Look at that.
Yeah. Yeah.
Oh, actually, that's
way
17.
Back.
Yeah. Right.
Yeah. So not much dumping really when you look at them. You have to get down to. Yeah, I mean, not much. In terms of just 500,000 shares is the first one that spikes out of 13F as of March this year. And even, First Eagle Investment, they sold 480,000. They're still sitting on 6 million shares, so.
Not bad.
Yeah.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow right now up 45. Nasdaq's up 35. S&Ps are up 10. Gold's down 210. Silver's laying flat, 16.19. Come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And we did find out what the Alt AGG is. What it is that when you hit this button, they are 13Fs, but they're big funds that have different funds inside the fund.
Yeah, so, or just a company that has different companies maybe in that same lane, right? Is that what?
Yeah, it's just like T. Rowe Prices, like Fidelity. I mean,
sure,
they have a huge amount of different portfolios.
Sure.
And they are 13Fs. We have Apple up right now, and there's some selling in Apple institutionally.
There sure is. So
look at this.
You have T. Rowe Price selling 35 million shares of Apple, quite a number. And then you jump down.
Fidelity. 21 million.
Capital Group,
oh, that's
25 million.
Yeah, look at those numbers.
State Street selling 11 million. I mean, they still massive positions, right? I mean, State Street, my goodness, 200 million shares. But just to highlight all those negatives and then to flip it around, really the only enormous positive was Berkshire, which got all the press. So it's interesting, right?
It is.
I mean, you have one buyer of 75 million shares, and it's Warren Buffett, so, rightfully so. Gets a lot of press, but when you turn it around, you add up all these numbers. It's
pretty intense.
It's at least, I mean, the top two alone, even call it the top three, surpass the one purchased by Berkshire in terms of you have what 82 million shares sold by these three companies.
Can you just hit that again, just for the buys again?
Well,
yeah, look at that. So you get 76 million, then you get line from 2 down to line 11 that, from 1.6 million up to 4.
Right.
But if we switch back again and go to the negative, oh my God, it keeps going. Yeah,
and
huge.
So number one, so it's like, just adding up. So let's do it, right? So that's 60, that's 81, that's 92. You're at 100 million shares just by number 5. So you're at 109. Right, you're at 116. I mean, you get to...
There's a lot more sellers than buyers.
You do, in terms of if you just add up the top 10, let alone, we're still at... Look at all... I mean, we don't get to under 1 million until you get to the 40th company for selling.
Yeah, it's huge.
Yeah, big selling for sure. And what's really interesting here is that selling took place by March, and there's been quite that turnaround. I mean, even in the last month, Apple's going from 160 to 185, right? And so they all missed that run.
And look at it, Apple's up today, too.
Yeah.
Man, markets are so deviant, it's unbelievable, actually. You know what I mean?
Yeah.
Because if you basically, looking at that and just it would seem like almost common sense. Like, how does that work? Do you know what I mean? You're seeing all that selling, but yet,
Sure.
we just went up. So March 31st. Let's go to March 31st.
Yeah, it's right around pretty much there. Now, it's for the last 3 months, though, right?
That's right,
I mean,
yes.
Who knows? Maybe they got a little scared as you're getting all this high volume.
February, yeah.
I mean, that's when the market was collapsing,
Oh, yeah.
you know, and people could have been saying, hey, man, these tech stocks could be in trouble here.
Right.
Maybe we're going to start unloading, and they could have been unloading during this portion of the
Sure.
market action.
And when you look at Apple, what ends up happening is that I suspect most of these funds made a fortune on Apple because look at that
sure.
chart.
For sure.
You know, so.
Yeah, and where we were just talking about is this bar right here.
Right, about
Yeah.
150, 145.
Right, that's, you know, so
right.
it looks dramatic when you look at it in the short term, but yeah, and that's probably what some of them were saying. You know, hey, are we really going to let this pull back down to 120, right? Where then you're almost back to where we were in 2012.
Ooh, that's weird.
Right.
Yeah.
Yeah.
Pretty wild.
Yeah.
Let's go back over that oil. Let's see what oil's doing out here.
All right. So to check back in on oil, it's 1046 right now. We'll jump over the charts, and oil trading just above $71. So we've gotten some volatility, but we're pretty much at what would be, you know, your max loss situation. Interestingly enough, though, we got a spike all the way up to 71.33.
Yeah.
So again, not really enough to cover if we had made the
like
volatility
50.
trade. Yeah, because we were starting so far below the $71. But again, you can always take one leg of that trade, and you know, if you were bullish, that was only going to cost you 10 cents, as in you were getting in, buying it at 71.10, and that would have been quite an acceleration. We were up to all the way 71.33. Could have been 3 times on your money, just to put out all those possibilities. And it's only 11 a.m. In terms of the noon trade on the bullish side was costing you about 13, which would be right where we're at right now, but that would be an hour and 15 minutes still to go. Yeah.
Sure.
Yeah.
And we talk, you know, today we're talking defined risk. We got our man, Mr. Dave White, tonight, right?
We sure do.
Man, time flies, man.
The day is upon us. Time certainly does fly. May 16th, today, 5 p.m. Eastern Time. You'll be live, 3 to 5, of course.
Yeah.
And then Dave White, right after your program, he'll be in there with subscribers to both of his newsletters. Option trading near expiration, analyzing swing trades and expiration day scenarios. So he's going to be in there walking his subscribers through his methodology that he goes through, you know, leading up to the monthly expiration and why maybe monthly expiration versus weekly expiration contracts. Dave and I, we've had some good conversations here in the office when he's here, just kind of talking about the differences between monthly expiration versus weekly expiration and what you're looking for, trading ranges. He said a couple good trades already this week, let alone previous months, which is why he put that together. So
check it out, folks.
Encourage people to check it out today.
Right.
Get in there.
And if you can't make it live, folks, it'll be on your page for 30 days. So,
That's right.
and I'm sure whoever's in there, you're going to listen to it a few times anyway.
I'm going to be checking it out.
Yeah,
for
big
sure.
time.
For sure.
And you know, we'll see where this market shakes out.
How about Best Buy? Can I see Best Buy? I'm just seeing a few headlines with Best Buy, whether it's Macy's, maybe they're going to get a little traction. No, not too much traction. I'm just curious, because they would be a good retailer in terms of...
Yeah. Well, and look at they're at a 52-week high right now.
And they're coming out with their earnings on the 24th, which is a week from tomorrow.
Okay. Look at that, man. Best Buy has been on the move. Look at this. So they're one of the first ones that come back from the dead, actually. So look at that.
That's when the world thought they were done and Amazon was going to take them out.
2012, $10. So they're up sevenfold.
Yeah.
That's pretty amazing, right?
And the transformation of that company, and even, you know, Jeff Bezos a couple weeks ago, months ago, when they started teaming up, where Best Buy is going to sell Amazon TVs, and there was a quote from Bezos in there saying they're going to be a study, you know, a Harvard Business School study in terms of turning that around.
Yeah.
And it was really interesting to hear Bezos talking about it. And of course, he's biased. He says that the day after he does a deal with them.
Yeah.
But there's a lot of truth to it, and coming from him, I mean, he's talking about, we almost put them out of business, basically, and his head was saying, and guess what? They really did turn it around. And they changed their business model, realizing they were becoming a showroom for Amazon, that they had to actually compete on price with those companies, and they managed to do it.
And, you know, if we go over to Amazon, it's going to be curious. I was reading this article this morning about what they're going to do, what exactly they're doing with Whole Foods.
Okay, what are they doing? Tell me.
It seemed like the articles this morning said that they've gone down in prices dramatically. At Whole Foods. At Whole Foods. But then on top of that, there's going to be, let's see. So Amazon's giving Prime members another reason to shop at Whole Foods.
Yeah, so they're going to start with discounts at the upscale, and it's at Whole Foods.
Yeah.
And pretty cool for us, starting Wednesday today in Florida and then expanding nationwide this summer. So they'll get additional 10% off hundreds of products. Now, I wonder what products, okay?
Exactly.
That's
do you really need them?
Yeah, do I need, a jar of pepper? Is that what they're going to give me? I mean, seriously, versus are you going to give me that off of a nice cut of steak or a cut of fish, right? They'll get an additional 10% off hundreds of products. They'll even get deeper discounts on unique merchandise, such as 50% off.
What is magic mushroom powder?
I don't know, man. Does that make sense for this
program? Sounds like a drug.
It does, exactly. Oh, well, there you go. $10 off per pound of wild-caught halibut. That's what I want to see, right?
That's a big one.
That is.
Yeah. Stay right there, folks. Tommy and I are coming right back. We have the Dow right now up 42. Nasdaq is up 37. S&Ps are up 10. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks, and we kind of hunted this Whole Foods deal, and this is quite a deal.
We started with hunting the price of halibut because we were curious, right? And what's interesting is halibut's all over the place. But what they talk about, and where was the halibut clip? There it is. So they said $10 discount, right? Well, they should have said 50% off, man.
I know.
To give, because I was saying, what's halibut? $39, and in certain prices it was.
Yeah.
But at Whole Foods, whatever they're selling, wild-caught halibut steaks will be $9.99 a pound, about half the regular price. So it was $19.99. They're shaving $10 off the price.
That's a great deal.
And then you start looking at, organic fruit, $2.99 versus maybe $4.99. Buy one, get one. organic sparkling water, but that's, I mean, yeah, that will get me in the store if you start selling, you know, fresh fish at half price at Whole Foods. Pretty, as they say, some of which are eye-catching. So.
That's definitely an eye-catching deal. And what does happen, folks, we're in halibut season now,
yes,
in a big way. So this is a great time to do it. You know, that's a deal.
That is a deal, man. That'll get people in the store, and then they'll spend money on everything else that is not marked down.
That'll get them away from whole paychecks name.
Yes, yeah. I agree.
Yeah.
So let's check back in on oil one more time.
Oh, look at that.
Yeah, so we're up at $71.33, back down to $70.96. So approaching that $71 point, which is, you know, the max loss if you had traded both sides of that trade. But like we always talk about, you could have been trading the 11 a.m. expirations, the 12 expirations.
12 is $52.
The 2:30 expirations.
Plus your commission, you know.
Yeah. So a little bit of volatility. We'll see where it shakes out. Not too big of a miss, but the market kind of just not too big of a reaction in general.
And that, you know, that's why you want to look at the different time frames also.
Yeah, because depending what your market bias is, all that stuff, right? For sure.
Stay right there, folks. We got swim lessons coming up next, and we got Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Of course, don't forget, Dave's going to do a great workshop for you tonight. Check it out on the front page of TFNN.
Thanks, pal.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.